All right, home equity lines of credit are huge these days, with equity being at all-time high, rates going up. But it still is a great time to remodel that bathroom, that kitchen, college funds, emergencies. Right, a home equity line of credit has a lower interest rate than a credit card. So for a source of just funds to have access to, it's a great thing to have. So when you're shopping around for a home equity line of credit, there's really three things you should be aware of. First, know right out the gate that a home equity line of credit is adjustable. It is not a fixed loan. It is an adjustable loan. But the good news is it adjusts the balance. The balance can adjust, right? It can go up and down as you borrow money and pay it back. But the rate will also go up and down. It is adjustable. It is, in fact, tied to the prime rate index, which goes up or down with the federal funds rate. So it's always 3% above the federal funds rate. So when the feds raise rates, say a quarter of a point or a half a point, your home equity line of credit will go up a quarter point or a half a point. And same if they lower it, it goes down a quarter point, half a point, et cetera. So it is adjustable and tied to the prime rate. All right, number two is there's a margin involved with the home equity line of credit. And so we have the prime rate, right? Whatever that is, and then you have a margin, which is what a percentage that the banks tack on. Essentially, is how they make their money, right? So let's just say if you have a margin of 1%, then prime's at 5.5%. Then your interest rate on that home equity line of credit would then be 6.5%. I would say a good margin is, 1.5 and under. And if you have really good credit and a lot of equity in your home, it should really be like around 3/4 of a point or something like that. So do be very careful about your margin. You may not know what that is when you're getting your own equity line, but it is a big deal because it's going to have a huge impact on your rate. Third is closing costs. Now, most R lines in broker world, there's no like penalties or fees, but you should be very aware if there's penalties or fees for closing it early. I know there was a time and a place when a lot of the bigger banks offered these no closing cost shiny home equity lines with these great start rates, but then 9 months later, you have a higher margin like we just discussed, and then there's also penalties to close it within like a 5-7 year period. So you're kind of stuck. So that's one thing. Know about what the closing costs are. Also on the front end, the closing cost should be 3,000 or underish, depending on what you're doing and your credit score again. But know what's going on in the front and what happens when you close it. The closing costs and penalties is number three as far as things you should really be aware of when you're applying for a home equity line of credit. Again, I'm Garrick Werdmuller. You can scan that QR code. You can go to freshhomeloan.com. You can call me, and I'm here to help you. My team is here to help you. We're going to do a great job for you. We're going to get you into one of these things, very painlessly and quickly, a lot quicker than, the retail banks are doing like 90 days on some of these things. And that's just ridiculous. So we should be about 30 days or less, and we're here for you. Independent mortgage brokers that work for the people.
Yeah, Fresh Home Loan Inc. You want mortgage rates without breaking your bank? Well, I got what you need. I'll keep it 100. The very best lender. We sell money, yeah. There's really no equal. Independent mortgage brokers that work for the people. I know that the pandemic's brought many problems. What we offer is better rates.